Well, good morning, everyone. Welcome to our Thursday morning trading session. One moment here as I get the screen share going. The markets just opened up about a moment ago here. All right, I got a question here from Lorna. Welcome, Lorna. Lorna says, good morning, Eric. I know this sounds crazy. I just purchased the system, have it installed, been going through the training videos, learning all the do's and don'ts of entering trades, but I can't find the video that tells you what to push on the trade manager to get in a trade. LOL, she says. The only thing I can do is to push the buy sell button. Help. Where's the step one instructional videos? Well, you know what, Lorna, that's actually a great question. I'm a little embarrassed to say that we didn't even think of that ourselves. Let's take a look here at an example. So we're getting here a hard edge bounce signal on the Eagle here in the NASDAQ. We've got an opportunity for a second push on this entry. All that means is we've allowed the signal to engage. We're going to enter above the high. So let's say we choose to set up our trade something like this. You hit the submit button. That's going to turn your order, your static order, into a pending order. Now, you can also use different entry order types. By default, we tend to use the stop order. And all a stop order means, if you're unfamiliar with the term, a stop order means that we've set a price here. This is kind of our line in the sand, if you will, at 47.82 and 3/4. This order will remain in pending mode until the market trades through 47.82 3/4, at which time it will become a filled order. Your other options are a stop limit order, which is essentially the same thing, but it puts a limit on the amount of slippage that you will accept. And you can set that slippage amount up here. In most cases, if there's enough volume in the market, slippage is not a real concern. So if you're trading any of the big markets, the stock indices, crude oil, gold, all the popular stuff, soybeans even, so long as you're staying away from the exotics, you're going to do all right. So you see our order here now got hit and it got filled. It became a live order. Once the order goes live, you can change your other parameters. So you can grab your stop, you can pull it away, you can change where you want your break even to be, you can change your profit target, you can do all that once the order goes live. But so long as it is in pending mode, you won't be able to change anything. All right, so I hope that makes sense to you. The other order types, while we're looking at it, we've also got a market order. Now, a market order is going to be the same as hitting your buy or sell market buttons. Let me cancel this here for a moment. And I'll show you how that works. So let's say we change the order to a market, and I set up my trade to enter here. Oh, you know what? Let's say I set up my trade to enter up here. Watch what happens when I hit the submit button. Did you see that? The order quickly changed from a pending order to a live order, and because it's a market order, it got filled at whatever the current market price was or is. So that's a market order. Then you also have a limit order. Now, limit orders are meant to be entered below the current price. So right now the market's trading 47.82 3/4. Let's say I wanted to try to buy it on a little bit of a retracement, thinking maybe it's going to come back here to 47.80. In that case, I would have to use a limit order. So I would place an order to buy at 47.80. I would hit the submit button. It would become a pending order and it would only go live once the market retraced and touched that number. All right. But yes, that's a that's a very good point, Lorna. I never even thought of that. All right, so we're working our red bar buy signal here now, right out of the gate. That's not bad, kind of a little bit of a trend line bounce there. What we're looking for here now is a retest of the overnight high before a possible failure and a possible move lower. Very, very strong move out of the open on the part of the buyers. Let's see, did we get any subsequent signals? Working a green bar sell here in the hawk, which currently is just in warning mode. If that completes, that is a signal you could look to buy. Although here in the hawk we haven't seen a retest of the low yet, have we? The Raptor also giving us that hard edge bounce. When the Raptor moves into the cloud and starts bouncing out, we normally anticipate two pullbacks. That's how we get our double pullback signal. Let's see if I can find you a good example. Oh, here we go. So here's a double pullback. So the market, it's actually also a cloud crossover. You can see this a couple of different ways. The market changing direction, pulls into the cloud once, comes out. Here's the first attempt to regain the trend. And then here is the second attempt to regain the trend. That's the one we're interested in. That's a double pullback signal. All right, so the hawk here finishing now the green bar sell signal. This is a signal which you could take with trend, look for a little bit of a scalp there, or you could just set up to buy the failure. If you're going to do that, you probably need to risk it above the high, or pardon me, buy it above the high, risk it below the low. Or, if you're unsure, you can simply use this as an early warning that perhaps we're going to get a green bar sell signal, but we'll throw, sorry, a green bar sell, a first micro macro cross signal. As you can tell, I'm not a very good multitasker. The Falcon making a nice little bounce here off the secondary support, being supported by the primary support, coming in with a warning dot and a possible buy signal here also. So everything kind of looking a little bit on the bullish side, at least for the very short term. So there's a possible signal in the Falcon as well. And here in the Raptor, depending on how you want to look at this, you could consider this a, well, no, it's not really a soft edge buy. Sorry, that's kind of stretching it a bit. Yeah, Jim says oil's getting taken to the woodshed this morning. Let's take a look here at crude oil. So here's crude oil now on the Falcon. And yeah, they've been in a tailspin, well, last couple of days, really. Very bearish session yesterday. Bearish through the overnight. A little quiet out of the North American Open, although they did tail off a little bit. Might see a little bit of an uptick in crude today. Maybe nothing too terribly serious, but just enough to flash some support. All right, everybody's stalled. Are they waiting on some sort of announcement? No, not yet. We still got about 15 minutes to the top of the hour, give or take. So Leash says there is news at the top of the hour. I don't follow the reports that closely. Who are we waiting on here this morning? Let me check. Manufacturing reports. Okay. Yeah, the construction spending could have a little bit to do with the market as well. All right, good to know. And tomorrow, pre-market, it looks like there's it's not a huge report, but the non-farm employment change could have a little bit of influence on the marketplace. All right, here in the Hawk now, we're also getting a first micro-macro cross signal, and you can see it's about to print at the same place that the failure of the green bar sell, which is why you don't always need to rush into the failure signal, because very often you're going to get a first micro-macro cross signal printing at more or less the same same level. Lorna asks, when it slows down, can you show, and you get a minute, can you demonstrate how to put all three charts on one screen? Thanks. Uh, Honestly, Lorna, it's just grabbing the chart and resizing it. Here, I'm going to share with you my other monitor so that you can see here what my other monitor looks like, where I'm following soybeans and crude oil. And you can see how I've got the market stacked. I've got soybeans here on the left, crude oil on the right. So when I get a signal, let's say I get the scalp signal, and I look across my scalper and I say, oh, okay, scalp signal there. Oh, scalp signal here. All I need to do is click the maximize button. And now that allows me to focus on this particular signal in this particular market. Then when I'm done with it, I just put it away until the next signal calls out to me. Now, to do that, really all you do is you build a chart. So you go new chart, and whatever, let's say we're going to build a gold chart. And we're going to have our 6-tick hawk. There we go. So I pulled out of my templates down here my hawk. I apply it. And while we're waiting on that, okay. So now we have our default size chart. And so now, quite literally, I just put it up in the corner, I grab it, and I resize it to whatever size I want it to be. You know, if you're only going to run 3 charts on one screen, I prefer them, my own personal preference is I prefer them horizontal so that I can see into the history of the chart. I know some people who like them more vertical and will stack 3 charts across their monitor this way. There's nothing wrong with that. Oops, sorry, did a little auto resize there. So you could have your hawk, you could have your falcon, you could have your eagle, depending on how much screen real estate you have. But a lot of times the chart ends up being very narrow, like this. I think there's a little bit of a danger just focusing on the last 10 bars or so. Now, again, when you get the signal, when you get the warning, like here's a macro pullback signal, right here, macro pullback signal, I wouldn't necessarily just go, oh, macro pullback signal, I better put in my buy order. No, I would still want to expand the chart, and I want to see it in relation to everything else. Have we had a retest of the low? Is this market really getting ready to rally? That's why I like to see more of the history in the chart. But yeah, that's all there's to it. To resizing it, then you hit your resize buttons, and you can make them, you know, whatever size you want. Good. Yeah, Lorna says, no, that's what I was doing. I just thought maybe there was a magic formatting button like my magic mouse. Nope. Nope, not yet. But it's I know Windows you used to be able to click on your menu when you had multiple windows and they would tile them for you. This is what they used to call tile. But I don't think they do that anymore. At any rate, when you tiled it, it would always mix up the order. So I'd always end up having to pull them over where I want them to be. Here's a little tip though: when you get your tools set up the way you want, like you've probably noticed, I don't run the directional background highlights, so you can tweak those kind of things by going to your indicators, going down to your tool in question, and in this case the hawk. You can change some of the cosmetics. Like I've changed some of my alert colors from the default just to make them stand out a little bit more. And then the background opacity I've turned off, and you do that by turning the value to 0. When you have everything set up the way you like it, do yourself a favor and save it as a template. So I just call mine my hawk, my falcon, my eagle, my raptor, and that tells me that it has my default settings versus the factory settings. Now, if you like the factory settings, that's fine. Nothing wrong with it. For me personally, I like to tweak it a little bit, clean it up, play with some of the colors and so on. Yeah, like Jim says, and back it all up. Yes, very important to back it all up. Okay, now I've kind of let some of these trades go by the wayside as we were watching that. And we've just had a huge reversal right here off of the median line, as a matter of fact, in the Falcon trade. That's not to say this wasn't a valid signal. It is. It's a valid signal. And I think we're going to see the buyers try to step in here and support the market a little bit. After all, this is where they began rallying the market, but that's a pretty strong move lower on the part of the sellers. We may have just seen a shift in market momentum. All right, so not much point in rolling my stop just yet. If we get a little bit of traction here, I may try to bring my stop in somewhat. The eagle floundering also, and actually producing a rule of 3 signal, even though we only have 2 counter trend signals. We have had something that's looking like a retest. Normally we see 3 counter trend signals before the market actually reverses on itself. So I'm hoping to get one more little push higher. I may bring in my break even somewhat. I should probably adjust these stops a little as well. I don't want to play this too tight. Last thing I want is for the market to tag me for a tick or two only to reverse and head higher. And we've all seen that happen. The Raptor's still struggling here this morning. Not much going on with the Raptor right now. If it does rally out of here and print a buy signal, you could make a case for a double pullback. Right now, you could even make a case for a cloud crossover. Thanks, Gary. Gary says 3 minutes until the report. Oh, yes, Mr. Buckaloo also reminding me that if you can also double click on the header of your bar, of your chart, to resize it. If you don't want to use your little max window. Come on, get up there, you. I'd love to see the market print higher here. That would give me a good reason to start rolling my stops up a little bit. Thanks, Jim. Jim says the advanced decline number is a little lopsided. Well, not really all that lopsided. 1,100 on the buy and just over 1,500 on the sell, so almost a negative 400. That's not huge. But does give a slight advantage to the sellers. Oh, good point, Jim. I forget about doing this as well. I'm running 3 monitors, but Jim says you can also get a 50-inch smart TV at Walmart for 400 bucks, and that gives you plenty of screen real estate. Yeah, there we go. There's the report, and we're getting some serious heat now. First micro macro cross lower, right here. Oh, did they tag me out? Oh, they did too, you so-and-sos. What did I just say? What did I just say? I didn't want to get tagged for a couple of ticks, only to watch the market reverse against me. All right, so now we definitely have a Rule 3 signal. We're coming back with another sell signal here. Market's moving very brisk. We would want to cover above that high. Oh, forgot I got a limit order in play. Let's close that out. Put in the stop order again. If you ever end up doing something like that, like getting a fill that you don't want, hit your close, hit your close button right away. If you ever do anything you're not quite sure about, hit that close button. So the rule of three signal here on the eagle, 1, 2, 3 signals counter trend. We have had a retest of the high. A rule of three must always, always, always be preceded by a retest of the high. So if I didn't already get tagged out on this little slip right here, I would be rolling my stops below these lows in anticipation that if the rule of three holds, we will see the market head lower. So it looks like that first little move was nothing more than a knee-jerk reaction. Yeah, Jim says there's very little volume on some of these bars. You're right. The market just took off. I don't know if I got any with zero volume, though. Jim says I got some bars with zero volume. Yeah, watch this. Oh, okay. It's a G-rated program, Eric. You sons of buyers, you. So we're coming back with another red bar buy signal. Technically the band a little bit on the bearish side, but just barely. All right. So here they come. I'll reproduce that. Oh no, we don't have a rule of three signal yet. The red bar buy signal here voided the previous signal, so I'll just wait for the new signal to print. Crude oil. I'm coming here now with a trend change signal. We were kind of anticipating that this morning. Can I cover it all the way down there? Oh, no. All right. Can I at least cover it to the crest? Oh, maybe below that candle. Oh, I can. All right, so I'm going to play this bar right here with this long, long tail. We only have the warning dot at the moment. All right, the signal is not complete. It's not unusual to see two warning dots and then have the market print a signal. So I'm not going to throw my order in just yet. But there's a possible buying opportunity brewing in crude oil. Oh, see, and here's an example. I just put it away, and we got the 3 warning dots. So we're going to enter now above there. Can I do it? Oh, I can't. All right, we'll try to get it on the second push. Then that should enable me to get in a little bit tighter. All right, we'll put that away for now. Okay, they're struggling a little. Jim says, wow, somebody's actually buying crude. Yeah, I think they're due for a little bit of a retrace. And tomorrow, of course, Friday, before the holiday weekend, the Labor Day weekend, I think we might see a little bit of profit taking in some of these markets. Daniel's asking, long on the Falcon, if you're asking about the crude oil trade. No, not yet. I would have liked to have bought it here on the hash mark, but I couldn't afford to risk it below the lows. So this is a little bit of a compromise. Oh, on the NQ. Let's take a look here. Daniel's asking. Yeah, there's a possible buy signal brewing here. Oh, actually, no, you're absolutely correct, Daniel. That is a buy signal that's printed here on the Falcon, and you could cover it below the low. As you can tell, though, the market is still a little bit messed up. Right? It's trying to head higher. It gets knocked down. Right, here, let's do it properly. So it tries to head higher. The market does a full reversal. It tries to head higher this morning. Market does a full reversal. And now, for each time the market tries to rally, it gets knocked down. Rally, knocked down. This will break sooner or later, but yeah, fortunately that buy signal did not get tripped yet, because I would have a feeling the market would try to knock it right back down here again. But it is a signal, no question. I might scale down the risk amount a little bit, given the amount of choppiness that we're looking at. And now we're printing a sell signal, so we can void that buy signal. All right, here comes the eagle once again. Now we're currently against the ATR. So I think what I'm going to do, given the amount of choppiness that's in the market, I'm going to let this current bar finish. If it finishes on the low, I'm going to treat that as my signal bar, and that's actually going to allow me to enter on the move here below the lows. Of course, if you wanted to be more aggressive on the trade, you could take it on the hash mark. It is our trend change signal. Risk it above this morning's high. That seems like a feasible trade. But we know there's some support down here, obviously. When the market, when the report broke, the market made a quick little run lower, only to turn at 47.72. Oh yes, that's true. Daniel says even though the market's, or not Daniel, sorry, Steve says even though the market's slow, yesterday I counted 9 signals. Hindsight being 2020. But you know, Steve, that's how you get a handle on these tools too, and how you learn to trust them, is by going back in the history of the chart and studying the signal and saying, yeah, okay, that signal actually does work out. All right, so do the sellers have enough to move this market? You can see the hawk, very, very conflicted, obvious little sideways trading range. he says, I'm going to be switching from signals to an old soup can with chicken bones. Yeah, the one that's always mystified me is the ones that trade by the zodiac and the lunar signals. Never quite wrapped my head around that one. And there's a huge following with that. All right, so the Raptor coming out now with a double pullback style signal. Actually, I suppose you could say the double pullback actually triggered here. I may take the slightly later signal here on the Raptor and anticipate that this warning dot will actually turn into a signal. We're still inside the trading range, however. So trading range looking something like this. So it's definitely a little bit more risky on my part. And we'll get a stop strategy in play. All right, well, a quick little move down there, hit our first profit target as well as our break-even trigger. So the trade's sitting at break-even at the moment. We got a comparable signal here in the Falcon. This is a trend change signal that we would have shorted. Probably hit our break even if you're running an auto break even trigger. And just hovering above, oh, there we go. We would have hit our profit target there as well. And a very nice first micro macro cross signal right here in the hawk. So clean signals across the board. We're currently working the Raptor and the Eagle. Let's see what my parabolics look like. Sure, we'll go with parabolics on the Raptor. Oops. Parabolics on the Raptor. Okay, Eric, one thing at a time here. Don't strain yourself. We can probably start to bring these ups in as well. At the very least, I think somewhere above 47.80 would be prudent. Come on. Don't be like that. So I'm going to roll my break even up a little bit here. If the market retreats back toward these lows, I'll take the break even. I've already locked in 10 ticks on my break even, my auto break even. They're trying hard. Come on down. So what's happening here? Why did the market stop? Well, we saw this tight little sideways trading range develop. And we know in trading ranges that there's buying that goes on toward the bottom end of trading ranges and selling that goes on toward the top end of trading ranges. Now that the market has broken through the bottom end, that doesn't mean that the buyers have gone away. If anything, the buyers see this as a better price to buy at. And so they're trying to buy the market higher. And this is why we get these breakouts along with a retest. This retest now is, you could say, put up or shut up time for the sellers. The sellers managed to break the market down below the support. Can they keep the market down? Or will the buyers move the market back and establish a new, larger trading range? That's the question that's on the table right now. I think it's fairly safe to say that at the moment, the sellers are in control of the market. So we've got some support down here. So I hit my auto break even, rolled the stops up. Oh, I can do parabolics here as well. Come on, be nice. There we go. That's what we want to see. So this was the retest right here, all in one bar. We may end up getting a larger retest as the day progresses, but that was it. That was the retest and the failure all in one bar. It may actually have looked like more in one of the other charts. Let's see, a little bit more of a retest here on the Raptor. The Hawk also would show us a little bit more of a retest. Got a little lucky there, I have to say, but it never hurts to be a little lucky. The market definitely with a bearish flavor today, though. All right, so we managed to hit our profit objective here in the Eagle. Hooray for us. And now let's see what we can do about our Raptor trade. Parabolics, generally speaking, very good at keeping you in a trade for the better part of that move. We're seeing some very strong selling now. Wow, they're almost in free fall now. What was yesterday's low? I think we're sneaking up on yesterday's low. Yes, we are. So around the 47.50 area. And that's, oops, 47.45 is our, 47.45 half is our next support zone. Good question, Darcy. Darcy asks, is there a reason you don't have the ultimate support and resistance suite on all your charts? Well, the ultimate support and resistance suite, the numbers will be the same on all the charts. In order for things not to get too cluttered, I only put one tool per chart. Now it's more for your sakes, because I know when you're watching the presentation on your monitor and whatnot, things can get a little overwhelming. But some of these tools, like the Geiger counter, the ultimate support and resistance suite, the trade forecaster, the day ranger, all those standalone tools will all give you exactly the same information. So I'll show you what I mean. Where's my support and resistance lines? I got enough day. I'm sure you know what I'm getting at here in a second, but we may as well show you. I'm not going to mess with this trade because it's still live. But you see, the information is redundant. Now, if you're trading, if you're trading at home, and if you're trading at home, when you're trading at home, I should say, and you want to have all this information handy rather than flip from chart to chart, you can, by all means, leave them on your chart. So when you get this rule of 3 signal and you say, oh, well, maybe I want to cover above the median line and I'm going to take profit down here. Eric says the market should move 2 zones, so I'll take profit on the second zone. Yeah, by all means. I don't have them on all the charts just to avoid the clutter. But you can see the information on all the standalone tools is exactly the same. Yeah, see, like Tony says, my personal preference is to have the support and resistance suite on all my charts. And absolutely, no, there's nothing wrong with that. Robert's asking, are the zones part of the Raptor or is that an add-on? The ultimate support and resistance suite, these lines that you see here, these are an add-on. They're a standalone. The Geiger counter is also an add-on. As I said, I only put 1 per chart to avoid clutter. And, I don't have to have the Geiger counter on the Raptor. It just ended up there. I could put my Geiger counter on the Hawk and the support and resistance lines on the Eagle. But in order to try to keep the charts clean and the monitor not to look overly cluttered, I only put 1 add-on per chart. So here on the Hawk, I have the Day Ranger here in my top left. So I can tell that my average 5, 10, and 30-day ranges just got annihilated today. We're up to almost 180 ticks, and we've been averaging anywhere from 120 to 130. So big breakout day today. Here on the Eagle, I have the Trade Forecaster. And Trade Forecaster says we're in trend mode for about another 20 minutes. Yes, I would agree with that. And swing mode coming up after that. So we can anticipate, I would anticipate after this move, maybe not a full-on reversal on the part of the buyers, but perhaps a sideways range as they try to recover the market, as we see a little bit of profit taking maybe. And it looks like we just got tagged there on a little bit of a reversal here in the Raptor, but that's okay. We got the better part of that move and a very nice solid move across the board. All right, Peter's asking, Eric, when you get a minute, can you advise your Raptor settings for soybeans? Absolutely. Okay, so let's take a look at a stock Raptor chart with soybeans on it. And you can see the problem is that these vertical lines, these are session break lines. These are day breaks. And what happens is the lines are too close together. You're not producing enough signals per day. This one's pretty close, but by and large, unless you're going to take a position trading point of view, where you're going to be prepared to hold it for several days, you're not going to get very many signals. So a lot of these markets that trade at 1250 a tick, the most notable being the E-mini S&P, we need to adjust our settings. So we've got here on the, oh, excuse me just for a moment, Tony's asking, do we have a 4-arrow consolidation on the NASDAQ? It's possible, Tony. I would much prefer a macro pullback signal here. You are correct that the market is starting to consolidate, but I think I would favor a more bear flag type formation. So I would probably start counting here, 1, 2, 3, and let's see if we get signal number 4. You're going to have with this trade is if you start counting here, which there's nothing wrong with counting there, you can say, okay, well, this is my 4-arrow consolidation. Where am I going to cover this sucker? Right? So even if I cover back here, remember, we may see a major retest up here. Can I cover there? No, I can't. I'm too poor. Can I cover there? Yes, I can. It's likely we're going to get a little heat. It's likely this is going to move into a macro pullback before we see the sellers try to push it lower. Now that's a gut call, but you could see this as a 4-arrow consolidation right there. All right. Sorry for that little detour. Back to the Raptor settings on soybeans, the E-mini, and similar instruments that are giving you a lot of very, very tiny sessions to trade. All right, we're going to go with our alternate settings, which is a 4-tick hawk, 4-tick falcon, and 6-tick eagle. I guess the first thing we should do is change the brick size. So we're going to go here to our data series, and we're going to change from 8 ticks to 4. We'll apply those changes. Okay, so now you can see we've got much larger sessions, but the signals don't look right, do they? Let's go to our indicator panel. And we're going to find the Raptor. And now we're going to pull down here to where it says Hawk brick size. And we're going to change that to 4 ticks also. Now we need to adjust our double clouds. So the one cloud, we're going to make 4 ticks, and the other Raptor cloud, we're going to make 6 ticks. When you've done all that, you can apply your changes. And you should have a Raptor that looks normal, air quotes, normal. Whenever you make changes to a chart, the settings, what you want to do now is you want to examine a few of the signals and see what kind of follow through you get. Not necessarily that the signals don't result in a losing trade. A losing trade is going to happen from time to time, but rather, am I getting a clear signal? All right, so it's been a little bit choppy back there. We're going to roll here through the chart a little bit. Oh, here's a trend change signal. Cloud crossover, right? Market comes down, crosses over, bounces out of the cloud. Okay, that looks like that was a decent signal. So far, so good. Here was a cloud crossover, had a little bit of follow through. Here was a soft edge buy that produced a little bit late. Normally after the test of the extreme, we see it print somewhere through here, but whatever, it printed a little late, but regardless, it still had some nice follow through. So it's looking like this may be a fairly decent setting for our instruments like soybeans and the E-mini and so on. Here we have a double pullback signal. So the market pulls back, here's signal 1, pulls back, there's signal 2. Yeah, we took a little bit of heat, but eventually had a very nice follow through from there also. Okay, so those are your settings, 4, 4, and 6. And soybeans tailing off very nicely today, by the way, here before we leave soybeans entirely. So we had a cloud crossover signal right here. I guess that was all the retrace we got, or maybe this was it right here. Regardless, they printed more or less in the same neighborhood. Unfortunately, a little bit late. I think one of the other tools, yeah, the Eagle looks like gave us a solid signal. Let's take a look here at the Eagle now on soybeans. We had a rule of 3, kind of congested. You know, when this is printing, it's not the most obvious of signals, but remember with the rule of 3, you're always looking for a rejection. In this case, a rejection of prices moving higher. It keeps moving lower, printing a sell signal, tries to go higher. Moves lower, prints a sell signal, tries to go higher. Moves lower, prints a sell signal. Okay, it's happened 3 times. Is it going to go or not? Well, I wouldn't necessarily take it on the hash mark because it is a counter trend signal, but I would certainly entertain taking it below the swing low, covering above the high. And then when we came back with the sell signal right here, well then it's almost a no-brainer. We're going to see a breakout. Will it be a sustained breakout? That we don't know. It may just break out, retest the lows down here or here, and then maybe even bounce. But if the market does get down here, we should have enough room that we can at least get the trade to a break-even type situation, or at least adjust our stops somewhat. Even the initial risk, not too terribly daunting. And so here we are. We're currently down here testing these zones. I would recommend the trade at least at break even. There's about 200, maybe 200 and change on the table. Never be shy to just punch out of a trade. So soybeans, actually across the board we've seen some nice moves this morning. Crude oil being a little bit coy, but that's crude oil for you. Nice. Tony says you got that first micro macro cross on crude oil right down here. Well done. Very nice signal. In the back of your mind, you always need to consider the context of the chart. You know, you've got a full-blown downtrend. I don't know what it is about people, but we're just wired to do things opposite, right? So you see this green bar sell rather than sell with the trend. You think, oh, the market's got to reverse. I'm going to buy it higher. No, don't. You could end up, long only to watch the market go into a tailspin again. Peter's asking about the Raptor filter on that, I'm imagining on the soybean. Should the Raptor filter change from 6, change to 6 from 10? I thought it auto-adjusted. Hold on a second here. Oh yeah, no, you're right. You're right. You can dial that down to 6 also. Sorry I missed that. Yep, there you go. I knew there was something I was forgetting. Good catch. All right, so it looks like we got a little bit of an uptick here. Here's that 4-arrow consolidation now with the macro pullback. Get too excited about this one, folks, because I would love to see this get into yellow bars, watch the market fade a little bit. I honestly think we're going to see a little bit of a sideways range here. If we do choose to short it, here we'll sim it. If you're looking for an order to follow me on, like I said, I wouldn't get too terribly excited just yet. Now, if the market gets up here a little ways to where the selling really took off before, around this 47, 66, 67, 68 area, I think we could see the sellers put the pedal down again and push the market lower. All right, I'm going to have to close the room here a few minutes early this morning. I've got an appointment with a member at the top of the hour, so I need a few moments to set up my charts. But we'll do this all again tomorrow, and hopefully we'll see a little market activity similar to what we saw here today. If you're going to follow the markets the rest of the afternoon, anticipate a little bit of a pullback here. I don't think we're going to see a full-on reversal. However, a sideways market is a very real possibility. So we're kind of at the bottom end of a potential trading range. I think we could see prices slip a little higher before we get a decent selling opportunity. Maybe even back into the hard edge, which would put it in that 47, 65, 66, 68 area. All right, guys and girls, we'll catch you tomorrow morning. Bye for now.